Precious metals have just had one of their best years in decades, with two of them over 7 times the return of the S&P 500. But is it too late to get involved? And is the hype justified? In this video, we'll look at gold, silver, platinum, palladium, and although not a precious metal, we'll also touch on copper. We'll have a look at what's been driving their performance, what future potential they have, and what are the best funds to use if you do decide it's time to get involved. For all of these precious metals, you can buy them physically, but for this video, I'm going to focus on funds, as they generally are the cheapest and most accessible way to get exposure. Gold is seen as a safe haven asset and a store of value. It's held by central banks and private investors, but it also does have real-world use cases as well. It's mainly used in jewelry, but it also does have uses in electronics, due to its high conductivity and corrosion resistance. Gold surged around 65% in 2025, its steepest climb since 1979. It's being propelled by this perfect storm of interest rates easing, geopolitics and global conflicts, robust central bank purchases, and the worry about the devaluation of the US dollar. And you could also add into that flows into gold funds. And although gold funds have been around for a long period of time, what makes this period different to all the others is just generally accessibility, especially from a retail perspective. In terms of future potential and moving forward, it's essentially going to come down to your view of when you think these tailwinds may end. And it's not just one of these that is powering the gold rally, it's all of them combined together. Interest rates will likely continue to come down, but at some point they will hit a floor. But that could still be a tailwind for the next couple of years. The same with geopolitics and general political instability. But you could also combine that with fears around the US dollar. Is confidence going to come back anytime soon? That can all change very quickly. And the longer a rally like this goes on, the more profit is held by investors. And accessibility works both ways. Although it's much easier to invest into something like gold now, it's also a lot easier to sell. In terms of options to invest into gold funds, I've picked out these 5. They're all the same cost at 0.12%. The other thing you need to take into account is the fund size, where generally the larger the fund is, the more liquidity that fund has, and then generally the tighter the spread is. That's the difference between the buy and the sell price. So from these ones here, I like both the iShares and the Invesco products. I've also added another option here, which is a GBP daily hedge fund, and you'll see over the course of a year how much more it's performed than the others, and that's down to the devaluation of the dollar, which gold is priced in, compared to a currency like the British pound. The worry about the dollar has been one of the big tailwinds for gold in general. So by hedging this against that currency, you're removing that risk. This of course can work the other way as well, because if you did invest into this fund and then there was a recovery in the dollar, then that obviously could work against you. And generally when you're holding investments for the long term, hedging tends to balance out. So really that decision comes down to how much emphasis you're putting on the devaluation of the US dollar. But if you want the most straightforward approach, then it would be this iShares physical gold ETC with the ticker symbol SGLN. Similar to gold, silver does have some safe haven properties, but it's now thought that around 60% of silver's demand comes from industrial purposes. Think electronics, semiconductors, solar panels is a big one, EVs, basically anything electrical. But it also does have use cases in things like jewelry and silverware. In 2025, silver returned an insane 148%. Congrats to anyone who's been holding silver over the past couple of years. You could basically sum up this performance as being driven by supply and demand. The Silver Institute flagged a 5th consecutive annual deficit last year. That means for 5 consecutive years, there's been more demand than supply. Compared to gold, because the silver market is smaller and has less liquidity, it tends to amplify the price action of gold, and therefore is more volatile. In terms of future potential, a lot's going to come down to solar and electrification in general. We've seen that move towards electrification through the use of EVs, but also through things like solar panels and renewable energy. So it really comes down to whether you think the demand for things like EVs, data centers, solar panels is going to sustain into the future. And how much do you think that's already priced in? One thing you can be sure of though is volatility. Last year, silver performed about 2.5 times that of gold. And that obviously works in both directions. So when gold dips 10%, silver could dip 25%. So you've got to be comfortable with riding that out. And there does seem to be a link between gold and silver, where silver tends to be catching up and there's almost a lag. And that in itself becomes a self-fulfilling trade, where although it's not exactly the same properties as gold, but because people believe that silver is the next one to go, once gold's had a rally, silver is then next. And that starts that momentum and that snowball effect. So you could look at one of the tailwinds for silver being gold. So then you could also look at the factors affecting gold will also have an effect on silver as well. In terms of options for silver funds, I've picked out these three, and again, there's very little between them. All got a very similar cost, varying from 0.19 to 0.2%. And because they're so similar, it's really going to come down to your preferred provider. In this case, the biggest fund is the iShares fund again, so you could say it's likely to have the tightest spreads. But to be honest, any of the other two, Invesco or WisdomTree, are absolutely fine. This is the iShares Physical Silver ETC, and it has the ticker symbol SSLN. Platinum's demand mainly comes from industrial uses, one of the biggest ones being the automotive industry, where it's used in catalytic converters for diesel vehicles. But it also has uses in fertilizers, glass and fiber optics, as well as jewelry. And more recently, it's starting to be used in hydrogen fuel cells. Similar to silver, a lot of the performance has come from a supply deficit, as well as having a very inelastic demand. So that means if the price goes up, say 5%, demand doesn't reduce by 5%. Because it's so needed in those specific areas. Platinum is also unique in that around 70% of global output comes from South Africa. And due to a lack of capital investment, that's only exacerbated this deficit. Last year, platinum returned a massive 127%, also following this trend of precious metals rallying at the same time. But despite platinum actually being rarer than gold, it doesn't have the same safe haven properties. Although, as we've seen in a lot of rallies, that investors tend to broaden out. So they'll go into gold potentially first because of the reasons that we've discussed. But then they feel like the rally is coming towards an end and they want to broaden out into other precious metals. Hence, they all start moving together. Some of the things to watch out for with platinum could be recycling. So as the price gets more expensive, firms might be more incentivized to recycle more rather than getting it new. And we could also look at the movement from internal combustion engines to EVs. How quickly that transition happens is still unclear. On the counter to that though, because platinum is used in the hydrogen fuel cell, if that industry starts to grow and outpace the rise of EVs, then we can have a bit more of a balancing effect. In terms of the best funds to invest into, there's only really two to choose from, and they're from two of the biggest providers in iShares and Invesco. Again, not too much to choose between them. Ongoing charge of 0.19 for Invesco and 0.2 for iShares, but with that iShares fund also having a larger AUM. That's the iShares Physical Platinum ETC with the ticker symbol SPLT. Palladium is similar to platinum in its use cases in that it's also used in catalytic converters, but for petrol vehicles rather than diesel vehicles, as well as having some other small use cases in electronics, chemicals and dentistry. In 2025, it returned around 77.5%. And it's a similar story when it comes to supply. And palladium's actually been in a supply deficit since 2012. The main things you'd be concerned with is the transition towards EVs. But one of the big tailwinds that it's had is the slower adoption to EVs than was maybe first expected. And what this has meant that out of the four, this is definitely the most volatile. In terms of the best funds to invest into, it's the same two again from iShares and Invesco. Exactly the same TERs as well, 0.19 for Invesco and 0.2 for iShares. The largest by AUM is this iShares Physical Palladium ETC, and it has the ticker symbol SPDM. Although not technically a precious metal, I thought it could also be worthwhile just touching on copper. In 2025, it returned about 44%. It's the electrification metal. Think EVs, charging, renewables, energy grids, and more recently, data centers. You could almost see it as part of the sticks and shovels play to the AI narrative. It has got some supply disruption, but nowhere near the likes of platinum. This is more of a demand-driven story. Electrification, EVs, and data centers are what's really driving this demand. And what makes this one to watch is that demand doesn't look like it's going anywhere anytime soon. It may not have the same growth potential as some of the precious metals, in the short term at least, but it could be seen as being more consistent. In terms of the best funds to invest into, there's only really one option available for UK investors to invest into a fund that tracks the price of copper, and that's the WisdomTree Copper Fund. And this has the ticker symbol COPA. Let me know down below in the comments if you're holding any of these precious metals or if you're thinking about adding them to your portfolio. I hope you found that useful. Thanks for watching.